All right. I think we are live. So, hi everyone and welcome. We're going to give it a minute or two to let a few more people join. So, bear with us for a moment while we wait. Two quick things. So, if you would like to follow along, the Crypto Breath Report is linked in the chat, or it should be soon. And it is worth opening now because everything we show today comes straight out of it. And as you settle in, start noting down any questions you have. And we have kept time at the end, and we would much rather this be a conversation than a monologue. So give us 2 minutes here. Yeah, so now you have it in the chat. So please open it and as noted, if you have any questions, then we can answer that in 30 minutes or so. Okay, I get the signal that we can start. So welcome everyone and thank you for making the time to join us today. I'm Martin Leinweber. I'm running our digital asset research and strategy at MarketVector, and I'm joined by my colleague Jonas Weber, who builds the data and the models behind everything you're about to see. What we want to do over the next, let's say, 30 to 40 minutes is introduce you to our flagship digital asset publication, the Crypto Breath Report. So this is the lens we use to look past the Bitcoin price and understand what the market is actually doing underneath it. And we are really proud of it. Rather than walk you through it feature by feature because it can get very long, we want to show you why it exists using the market we are all sitting in right now. Um, so let me start with sharing my screen here with a chart. And so let me speak with one chart and one slightly uncomfortable question here. So this is Bitcoin. And as we speak, we are trading around almost 64K. Now, look back to the early February this year. We were at 62.8 closing here, and it's almost the same level. So within a few percent, you can say, 5 months apart. And here's the question. So one of those two visits to 63, 62K, give or take, was a genuine bottom that paid you handsomely to add exposure. And the other one, we don't know yet. And I want you to look at this price chart and tell me which is which. Um, and you cannot. I mean, you can say, right, in February, for example, we had a relatively steep sell-off. This was a little bit milder. It can also look at volume, but really without any breadth measures, price alone doesn't tell you that much. And so that is the entire reason we built the breadth report, because price tells you where you are, but it doesn't tell you whether the market underneath you is healthy or hollow. And for that, you have to look inside, right? Um, so I stop here. Let me just stop sharing here. So it's a little bit slow here today. If you come from equities, you already know and you own this instinct. Yeah, you would never judge the S&P by its level alone. You look at the advanced decline line, at how many names sit above their 200-day, at new highs versus new lows. Yeah, so McClellan built an entire discipline on it decades ago. And the idea is simple. Yeah, a move backed by, let's say, hundreds of names should be durable. And a move carried by 5 stocks, for example, is fragile. And no matter how strong the headline number looks, right? And in crypto, strangely, mostly refuse to do this. They just look at Bitcoin, yeah, just at one price. And we think that this is a mistake worth a lot of money. And for the next 30 minutes, we are going to walk from the outside in and show you what the internals reveal that the price hides. And so Jonas is going to start with the widest angle view, size.
Right. So let's start by looking at each size index we have here from MarketVector. The biggest one is the top 100, the MBDA, and we slice that also into large cap, mid cap, and small cap. And just to get an overview of how the market has behaved over the last 12 months, we also compare that to Bitcoin and Ethereum benchmark rates, and obviously everything is red. Just Ethereum has a slight uptick here over the last 30 days, and you cannot really see a positive pattern here. But one interesting observation comes to mind here. That is when you look at the 90 days and the year-to-date columns, meaning 3 to 6 month time frame about, that's when the mid caps actually outperformed everything else. So mid caps outperformed Bitcoin, large caps, and also small caps. So kind of an interesting observation, but Martin, what do you think? What does that tell us?
Yeah, I mean, mid caps leading is a classic tell. Yeah, that capital is moving down and out of the risk curve past the mega caps into the next tier, which is normally where the early phase of a healthier market usually slows up first. Ethereum, you see it here with 30 days waking up while Bitcoin sleeps is also a good sign. But notice that the small caps are still lagging, which tells us the rotation is selective, not a broad risk on stampede. So if you compare that with the beginning, yeah, with the 63K print, so we are one lens in, and we already have more texture with this mid cap development. But I think one level deeper sit the 4 breadth internals we very often use, and that make up our heat index, the same family of gauges an equity desk has used for decades to read participation. And in a moment, we are going to combine them, but they are worth seeing one at a time first. So I would say, Jonas, maybe you start with that and then we go to the heat index.
So I find them very interesting, these single indicators. And first we look at the trend breadth, which is measured by looking at the top 100 components of the MBDA index. And we look at how many coins of those actually are above the 200-day moving average line. And you can see it's still just sitting around 20%, which is not that high. But when we zoom in here, early 2026, we were below 5% actually. So really deep bear market territory, and we have been improving since then, at least slightly. So that's on a 200-day moving average. Then when we look at the all season index, which is a bit more reactive because it's based on the last 90 days, and that just tells us how many coins of the top 100 are actually outperforming Bitcoin over the last 90 days. And this is surprisingly good, sitting around 55% right now, also improving from the depths of 10% early 2026 up to over 50% now. So there's a few signs that actually look very well. Um, then we also look at the net new highs and new lows. So over the last 90 days, we measure if or how many tokens at each point in time actually make a new high or new low. And when we zoom in here, it looks kind of still reddish, flattish. I mean, not a huge uptick to the green side, but also not a huge downtrend to be seen here. And then we also see our advanced decline line, which is only based on the top 50 components. And that basically measures how many advancers and decliners of the top 50 coins we have on each day. And we aggregate that on a cumulative basis. And even that still seems very bearish and hasn't found a bottom yet. Well, but all these indicators kind of look very interesting. But Martin, what do you think? How can we aggregate that all to a useful index here?
Jonas, before we aggregate, maybe you scroll down again to these sub indicators, because I think that's important. The useful part here is that maybe not all of them, but I would say two of them are not at these washout levels anymore. As you said, the advanced declines line is still heavy. New highs could be better, but I think what's interesting is that the internals here disagree with each other, right? Two are better, two are worse. One is maybe at the lows. So what I read from them is that I think the capitulation is behind us, but the day-to-day breath has not yet turned. And a market where every internal points the same way, that's easy to read. This one, I would say, is in transition, and transitions are exactly where the reading that the internals pays off, right? And so if you scroll up to the crypto heat index, yeah, what is it? The crypto heat index takes exactly those four internals Jonas explained, normalizes each one onto a common scale and equal weights them into a single number from 0 to 100. That's it. Yeah, there's no black box, no optimized weights here, just an even blend of the four participation gauges you just saw. Think of it as a 1 sentiment or market structure thermometer with zones running from capitulation through neutral to euphoria, which you can see here with a different color here. So two readings matter today. Yeah, if you think of it, back in early January at the lows, the index moved to and also signaled an ad exposure signal, right? So it turned from this depressed level up, and right now it sits in neutral. And having climbed out of the capitulation zone, and it spent much of the spring in, you could say, yeah. And neutral is the honest word for this tape where we are. So it is not euphoric, definitely not, which is where we start looking to de-risk, and it is no longer washed out. Yeah. So although we are trading near the cycle, this cycle lows in Bitcoin, and we come to that in a second, the market has stopped falling apart and has not yet committed. Yeah. So the depressed readings that lift into neutral need follow through now before we lean on them, right? And we come to that in a second, why we think this could be an early bottoming process. And breadth is not a one-way tool. Yeah, it catches tops as well as turns. Yeah, just with a different reading. For example, if you look last October at the all-time high, our breadth at the highs flagged a clear divergence, right? So they had a high in price, but not in breadth. So what you say is a negative divergence in technical analysis, and that was a warning sign. And I think what we have now is the opposite. Yeah, you have Bitcoin near the lows, but you see that breadth is already improving. And that is, I think, the interesting message here. I would say one more lens before we get to the leadership. And this one zooms all the way out. So everything so far has measured how much of the market is participating, yeah, how much components of the top 100s are participating. But here we have the crypto season index, and that asks a different question. Yes, the question is, what kind of market are we actually in? And Jonas, maybe you explain it here.
Yeah, so what we're doing here is we're looking at the trend in Bitcoin dominance and the small cap index we showed earlier. And by looking at that, we have four distinct regimes, meaning either both of these trends can be upward, downward, or either way can be down and up. And currently we're sitting around in a broad bear market, which is due to the fact that Bitcoin dominance has been trending downward. Small cap index also has been trending downward. And another interesting fact here is that there hasn't been an alt season in about 5 years almost. So we haven't seen that since 2021. Well, let's see what the future holds for that. But yeah, just kind of an interesting observation there. And what does that mean that we're currently sitting in a broad bear market? And we can also see that that the stablecoin dominance has been increasing, which means that the money is flowing out of crypto and it's not rotating within crypto. It's actually been flowing out of it. So Martin, maybe you can tell us what maybe does that mean?
Yeah, so I think this is a real and honest read here because uh, this is a bear market regime. Yeah, and people feel that. And money has stepped out, as you alluded to. But here's the constructive detail, and it ties straight back to the size indexes, right? If you remember, within that week tape, the mid caps are the ones outperforming, not the small speculative names and not the mega caps, but the middle of the market. And I think mid cap leadership, while the broad tape is still heavy, is a classic bottoming signature. And it is what the early tentative part of a turn tends to look like from the inside. So the season index is bear market, okay? And the size internals say maybe we are working through the bottoming phase of it. And which brings us to where the few genuine pockets of strength actually are, because one of them stands out, I would say, and it's not Bitcoin. It is in DeFi and specifically in the decentralized exchanges. But Jonas, I think you have the numbers here.
Yeah. So what you see here is the sector return versus Bitcoin. In this chart here, you can see the 1 month return compared to Bitcoin. And obviously, the decentralized finance tokens have been really outperforming compared to everything else. When we look at the 3 month chart, still the same picture, 24% outperformance versus Bitcoin, while only CeFi maybe also is holding up kind of flattish, and the others like Mucoin, smart contracts, and infrastructure applications are all still trending downwards, especially on a 1 month time frame. And if we look a little bit deeper into the decentralized finance sector, here we see the sector dispersion, and it's actually not just because of a few distinct outliers. It's actually mostly the whole sector that's been outperforming here and doing really well over the last 1 to 3 months compared to basically every other sector. On the 3 month time frame, you can also see here tokens like DEXA, GTO, Hype, which have been really on the upper side, on the trend to the upside. While, for example, in smart contract platforms, you can see that there's just a few select distinct tokens that have been outliers to the upper end, but also to the lower end. And there's just a lot of rotation and dispersion going on in these other sectors. And when we look more deeper into just looking at the last 4 weeks, what were the leaders and laggers, you can also see that it's been dominated by DeFi mostly. Here you have again DEXA, Lighter, Aave, and even Uniswap has a comeback. But yeah, maybe Martin, you can somehow tell us what all of that means for the leadership.
Yeah, so I think this is what real leadership looks like, right? A coherent group, the same theme, moving together well ahead of the benchmark, if your benchmark is Bitcoin. And compare that to February when there was no leadership at all and everything felt as one, right? The fact that specific fundamentally linked cohort is now pulling away is one of the healthier things you can see in the tape that is otherwise still heavy, I would say. It is the difference between a market that is dead and a market that is rotating, right? You have, and it's not a new thing. Yeah? We have that since a few months. This strength in DeFi, and now we have this news, and we wrote a paper on that on the Robinhood chain, yeah, an Ethereum layer 2 built for tokenized stocks and real world assets, live across more than 120 countries. And so you see that TradFi is now in really plugging straight into DeFi rails, yeah, with Uniswap, with Lighter, providing liquidity at launch and lending and trading venues integrated alongside. So, and that's a huge signal, yeah. When a brokerage with tens of millions of users routes tokenization and around the clock trading through the decentralized exchanges, yeah, which you see here, um, the market starts to reprice what those exchanges are worth. And interestingly, we've seen that long before Robinhood. So that is also a sign of a more sustainable strength here in DeFi. And which brings us back to where we started, Jonas. If you put up February and today next to each other with our multi-time frame performance, I think that's also very eye-catching, or two eye-catching charts here.
Yeah, exactly. So on the left side, you can see a snapshot image of the multi-time frame bubble map, which is basically showing the top 100 tokens and looking at the 1 month return on the x-axis and on the 3 month return on the y-axis. And why did we, so probably it's too small to see, but we used February 5th, 2026 for the snapshot. So why did we actually use that date? And here we go briefly over our crypto bottom finder, which is we call it crash capitulation index. And that actually triggered a signal on that date on February 5th for Bitcoin time series. And that measures basically just how far has the price been moving downward and how violent was the recent drop compared to the normal volatility of Bitcoin, how deep the drawdown actually is from the last high, and how oversold momentum is, and we aggregate that all into one score. And then we basically say when that score is above 98%, we get a signal, and for Bitcoin on that date was actually at a 100, which is very telling signal. And so that brings us back to the chart here. So as Martin said in the beginning, that currently Bitcoin is sitting right around the same price as it was in early February, but the market looks a lot different. So early February, we had basically every coin was in a bottom left quadrant, meaning over any time frame over 1 or 3 months, it was negative. And today it looks a lot more diverse. So again, you here in yellow, you can see all the DeFi tokens are dominating the top right quadrant, but there's overall, again, a lot of dispersion and rotation going on. So the market just looks a lot healthier, and that signals us that there could be a bottoming phase coming in. So, but Martin, maybe you can summarize or tell us what's your thought on that?
Yeah, I think it's the whole webinar in two pictures. Yeah, so we have, if you remember the Bitcoin chart, yeah, same price, different markets. Yeah, February was definitely capitulation, one signal, and that worked. And today I would say it's dispersion and rotation of leadership. So what is better? I can't tell you. The one is more the mean reverting thing. The other thing is really we have you can say a marginally lower low. We had that recently, but it's not backed by the breadth measures, right? And so and that's the use of the breadth report to visualize that because credibility matters more than just the headline, right? Our bottom fighter is not flashing today the way it was in February, okay? But also the Bitcoin exhaustion is reading nowhere near the extreme. Yeah, so and that's I think the main message here for the audience. Yeah, so the internal structure underneath the same price is far healthier than it was in February. In February it was negative trend, negative momentum, right? Short selling. And now you see people making a difference between different protocols. They see the positive fundamentals in DeFi, for example. We also see that for other protocols which have a use case. So it's not this broad altcoin rally where you can buy anything out there. It's really more a nuanced view, and that is the difference between guessing and knowing what you are standing on. And two closing points maybe before we come to the Q&A. So that is not a one-off snapshot. Yeah, we publish the breadth report every 2 weeks, and the charts also rotate with the phase of the market. Yeah, so near capitulation, where we are at the moment, we lean more on the bottom finder and the heat index zones, yeah, to identify the buying areas, the bottoming phases. Near the highs, however, I would say we lean more on the top finder and breadth divergences, and the ones, for example, that flagged last October. So the report is built to always show you the indicators that matter for the regime you're actually in. It's not a fixed dashboard. And second, and this is for the allocators, these are not only commentary charts. The same signals drive active allocation decisions. Yeah, as we have seen with our bottom finder, our top finder, also the add or de-risk signals in our heat index. And they sit underneath investable indexes, so you can read the internals yourself, or you can hold the strategy that trades on them, and everyone else is watching the price. Yeah, so we are watching whether the market believes it or not. That's the breadth indicators, and now I'm looking for some questions here. If I can find that here, let me have a check. So there's one question, Jonas, what the most important chart here is of the breadth report. Is this the heat index? Is it something else? If you have just 2 minutes to read the thing, should you focus on one chart? Or how would you read the breadth report?
Well, overall, for me personally, I like the heat index very much, especially two of those sub indicators here, the trend breadth and relative strength against Bitcoin, because it actually just shows you pretty early what could become in the market. But overall, you cannot just say that you're just looking at one indicator like that, even though the heat index is already an aggregate of these four indicators. It's not necessarily the only one you should look at. And I feel like it's always a combination coming toward me, and I'm looking I'm looking regularly, almost on a daily basis, on all of these charts, and it always feels like there's something new to find, and you can really, I mean, you can find something new in any chart any day. So that's, sorry, I don't have a very definitive answer to that, but it's just like all the charts here.
No,
How
that's.
how about you? What's your favorite one?
I mean, you know me. I look at thousands of charts every day, so I can't get enough of this stuff. So I look at even more than that, and maybe that's I shouldn't do that. Yeah, maybe less is more. But there's also another question: how is this different from just watching Bitcoin dominance? Yeah, and I think that's a good question. But to me, Bitcoin dominance is not breadth. And Jonas, if you scroll down to the crypto season index, where we also look at Bitcoin dominance. Yeah. So for the audience here, what is Bitcoin dominance? That's the Bitcoin market cap in relation to the uh, total crypto market cap. And so why that is an important measure, how dominant Bitcoin is. Bitcoin dominance can rise and fall for various reasons. Yeah, it can fall because suddenly altcoins are super strong, but that doesn't tell you if a lot of altcoins are strong, or maybe if just Ethereum or Solana is super strong, which would lead to a lower Bitcoin dominance. Or also, as we have it now, you have, if you look at the longer trend, a falling Bitcoin dominance from the highs, and also falling small caps, for example, which, and you mentioned it, Jonas, speaks of money is leaving crypto. So it's not dense enough. So we look at Bitcoin dominance, but we look at always the top 100 components. We look at different measures, and to get a much clearer picture about the state of crypto. And so I would say you can use that still, and we still look at Bitcoin dominance, but it's just a tiny portion of information you get, despite what you're reading on X and social media, yeah, where you just think it's about Bitcoin dominance. So I think I think that's all. Do you see another question, Jonas? No.
Nope, don't see anymore.
So I would say thank you all so much for spending this 30 minutes with us. So you have some time back. I hope this gave you a feel for how we look at the market and for what the breadth report can do. And if it did, here's one ask. If you would like to put any of this to work, the breadth report itself, the heat index, or the underlying signals, whether in your asset allocation process or an active mandate, talk to us. And that is exactly the conversation we want to have. Reach out to me or to Jonas directly or through our usual MarketVector contact, and we will take it from here. The report goes out today. Yeah, so and it's already on our website. It will be updated every 2 weeks, and we would be glad to add anyone here to the distribution lists. And also, Jonas, thank you, and thank you everyone for joining us today. We look forward to seeing you in the next issue. Thank you.
Thanks.